All right, so China is getting backhanded by deflation right now, with consumer prices falling at their fastest rate in 14 years. But this isn't bad just for China, this is bad for everyone. This sends a slew of down the pipeline. Now, if you can just picture this big ball of massive, stinky rolling down a hill and just engulfing everyone in its way with feces, yeah, that's what China being in deflation does. That's my analogy. And just to make sure that we're all on the same page, I want to very quickly explain deflation in simple terms. It's when overall price levels in an economy decrease over time. And, sometimes people think, well, inflation is bad, deflation is the opposite. So, isn't deflation good? No, you silly goose. Goods and services being cheaper may sound like a good thing at first, but deflation generally indicates a weak economy and it often leads to decreased consumer spending. What people do is they usually try to delay purchases in anticipation of, even lower prices, and really the deflation cycle can be really hard to break and it can lead to long-term economic downturn. And let's face it, the Chinese economy has been in trouble for a while now. It's got a lot of attention over the last 6 months or so, but trouble's been quietly brewing for many years. The Shanghai index has gone up less than 2% over the last 5 years. That's a pretty bad return. And side note, a lot of people are afraid of the Chinese economy becoming the largest economy in the world. I just don't really see that threat. If you look at the GDP per person, the United States is 6 times larger. And yeah, China is much larger at 1.5 billion people, so they may have a little bit higher GDP. But when you look at the GDP per capita number, we are 6 times larger in the United States. Anyways, back to deflation. What's going on with the deflation in China definitely presents a very special challenge to the rest of the world. It's like that rolling ball of stinky feces that we talked about earlier. Yeah, I guess you could argue that cheaper goods from China could help ease inflation elsewhere, but that also means the global economy can expect a flood of cut price imports as Chinese factories search out buyers overseas for products they can't sell at home. Let's not forget, China is the largest exporter in the world, so this has a far reach. They're like Inspector Gadget. Go, gadget arm, reach the rest of the world. This risks squeezing other countries' domestic manufacturing. And obviously, there was already challenges in China before all of this. And almost everyone knows about the Evergrande situation in China by now, but you may not totally get it, so I want to break it down for you a little bit, because this has major impacts on the Chinese economy. So, Evergrande is a giant real estate company in China, and it's one of the largest in the world. It built and sold homes, apartments, and of course other properties all across the country. And for years, the company was very successful, and it grew rapidly as it took on a lot of debt to finance its expansion. And this is not unusual in the real estate industry. But in greedy human nature, Evergrande took it to the extreme, and they went overboard. Dumb humans. The problem started when the Chinese government introduced new rules to control the amount of borrowing by big real estate companies, aiming to reduce financial risk in the economy. These rules are sometimes referred to as the three red lines policy, which puts limits on how much debt companies could take on in their relation to their cash flows, assets, and of course their capital levels. Evergrande had basically borrowed more money than it could easily repay, especially under these new rules. It had built up a huge amount of debt, and I think it was estimated like over 300 billion, somewhere in that range. And as the government tightened borrowing rules, Evergrande found it increasingly difficult to borrow more money to continue its operations and to pay off its existing debts. This all led to a crisis where the company was at risk at defaulting on its loans. Of course, this meant that it might not be able to pay back the money it owed. A default could have had serious implications, not just for Evergrande, right, and its investors, but for the broader Chinese economy and potentially the whole global financial system. That's how big Evergrande is. The real estate sector is a significant part of China's economy and many people's companies, and banks are directly or indirectly involved with Evergrande. So, of course, the Chinese government stepped in to manage the situation, aiming to ensure an orderly resolution and prevent a wider economic crisis. Man, Sounds like a pretty familiar story, doesn't it, my Americans? So, the sinking prices are just adding to an already challenging economy in China. And the ongoing effects of the Evergrande situation is throttling consumer spending. The exports are slowing, and foreign investors are starting to hit the road. Hit the road, Jack, and don't you go. You don't want to hear me sing. They're like, all right, this, I'm out. And can't say I blame them. You have to understand that deflation eats into the corporate profits, and it prompts consumers to delay spending in anticipation of better deals down the road. That leads to companies to cut prices and put off hiring and investment, further depressing spending and worsening the deflationary cycle. Now, some people think that consumer price inflation will return to normal levels in, like a few months or so in China. And personally, I'd have to strongly disagree there. I think there's an obvious deeper issue in the Chinese economy that isn't going to be hashed out in just a couple of months. And look, income growth has slowed. So this makes it harder for consumers to service their debts while maintaining spending. Workers are settling for lower paid jobs in a tighter labor market. And also, there's a lot of data that suggests that salaries for new hires are falling and corporate profits are sliding. So companies with a bunch of debt, especially, are wary of investing and hiring. And remember that China is essentially the world's factory. There's a reason that you've seen many products on them that you look on the bottom and it says made in China. They produce a lot of. When it comes down to it, China is a major driver of global economic growth because of this. This whole situation creates a whole worldwide ripple effect. The countries that rely on exporting to China are also going to be seeing reduced demands for their goods. So many people are worried that China will become the number one economy in the world. At this point, I'm almost worried they're moving too far away from that because it's going to affect the whole economy, the whole global economy. And we already have UK and Japan recently in recessions joining Finland and Ireland. And Germany isn't far behind. And China possibly going into recession if the deflation cycle keeps up puts more strain on the whole global economy. Remember, as much as countries are kind of competing for power throughout the world, our economies are also somewhat connected still. They're intertwined. So to me, it seems like the ripple is starting to spread further and further throughout our whole global economy. And you want to know what I think the cause of it is? Fiat currency. I mean, when has fiat currency ever worked throughout all of history? Let me spoil it for you. Never. Now, what's most scary about this time is that the whole world is on a fiat currency system. This experiment has never been done before. Not so sure whose genius idea it was to take a principle that has failed 100% of the time and magnify it and make it worldwide. Anyways, so as some see China's deflation as a good thing because we get to kind of pull further ahead of them, I don't look at it that way at all. It's just going to further hurt an already struggling global economy. So, what's your thoughts? Do you agree? Do you disagree? Leave a comment below. We love to hear your thoughts. Talk to you soon.